Okay, guys, kicking off the long-term perspective chapter of the course, we're starting off with understanding the anatomy of a candle. Okay, to first determine bias, we must understand the anatomy of a candlestick, the open, high, low, close, and the open, low, high, close, right? We can determine a complete day's or week's bias just from understanding the anatomy, okay? There are only three types of candle formations: classic buy candle, right? A classic sell candle, bullish reversal candle, bearish reversal candle, or a doji, right? Indecisional candle. Okay, so this is what a classic buy candle would look like. You know, the big one-sided candle. We open here, we trade lower into a key level, run some stops, and then we're just bullish until the end of the day, where we make a small retracement to create the open, low, high, close. Okay, classic sell candle. Open, high, low, close, right? Bullish reversal candle. This is when we start off the day with heavy bearishness, but then eventually hit a key level, run out stops, and then reverse heavily, right, into the bullish direction. Open, a long tail on the downside, right? That's all of this bearish price action, and then we have a strong reversal, right, ending up bullish in the candle, right, where we trade above the opening price and expand higher above it, right? That is the bullish reversal candle. Now, on a bearish reversal candle, we open, we trade aggressively higher into a key level, and then once we hit that key level and into a pool of liquidity, we have a massive move down, right, and end up bearish, right? So in real time, this is going to look like a full up close candle, right? But then as the day closes, it ends up being a bearish reversal candle. Okay, consolidation candle, a doji, right, is just going to be sideways price action. This is what we want to avoid. This is not what we want to participate in. Okay, so we have three opportunities inside of every candlestick. Okay, we have below or above the open, bullish or bearish, middle of the candle, within the expansion, or at the very end of a candle, right? Now, understanding this right here, the very end of the candle, is really, really important, because when you're looking at the higher time frame charts, right, it can give you days or even a week's bias just by understanding where getting to the end of this candle should create the end of the wick, right? If we're bullish, open low, high close. That high close, if it's on a monthly chart, could be an entire week's bias or multiple days bias, right? Just by understanding the logic, right, and the anatomy of a candle. Okay, so we're looking at this NASDAQ example here. This is a monthly chart. Now, we're going to focus on these two candles. Even though they are extremely one-sided, the understanding of the open, high, low, close, okay, that's this, and the open, low, high, close can help us determine a few days bias at the end of the candles, knowing a low or high needs to be made with a wick. And if you look at all of these candles, every single one has an opportunity on both sides. Okay, so here's that bearish candle. This is a monthly chart. Open, high, low, close. Like super bearish. Excuse me. Okay. Understanding just this, even when the bias is completely bearish, can give you multiple days bias. And this is why it's so powerful to understand this. And this is how it can help us achieve a daily bias once you get to these end of the months or beginning of the months, actually. Okay, so if we look at this on a daily chart, this is what the monthly candle looks like. We had an open here, high into bearish fair value gap. We created the high of the month. Then we had expansion, right? So this is trade number 1, above the open. Okay. Trade number 2, within the open. Okay. There's the bearish fair value gap. Trade number 2, in the middle of a candle during the expansion, right? We trade up into this up close candle in a premium from this high to this low, premium array, and running out a short-term high, right? And then we trade down below an old low, right, at the end of a month, right? So this candle here is actually the last candle of the month. It's not always going to be the very last candle. It could be the last 2-3 candles of the month. You could have multiple days bias, right? But the sell side liquidity, the relative equal lows, was still present here until we took it out here, right? So now that we've taken out the sell side liquidity here, the narrative that you should have in mind is that, oh, okay, we're at the end of a monthly candle, so we could see the low of a open, high, low, close form. And now we have an entire day's bias to be bullish, right? And then in the AM New York session, we trade down here to key level. Market trades up higher. We have relative equal highs. Remember, when we have this with a bullish bias on this day, we have a bullish bias on this day. Why? Because, like we just discussed, end of a monthly candle, sell side liquidity taken out, and then we have relative equal highs with all of that backing. We have a bullish bias for this session. Then during the AM equity open, we see a manipulation at 9:30 a.m. Then we see a reversal. For value gap forms, we could go long there, attacking relative equal highs. Okay, now let's look at the bullish candle here. Okay, the open, low, high, close. This extremely bullish, but still we can look for longs and shorts within this by understanding the anatomy of a candle. So market opens here, okay, creates a low where in a higher time frame key level, runs out a previous daily low, starts to expand. That's trade opportunity number 1. We then create a fair value gap here. We get the trade opportunity number 2. So remember, every candle has 3 opportunities. Now you can apply, I'm showing you a monthly chart here, right? Take this logic and you can apply it to a weekly and or daily chart. Highest probability would be monthly and weekly candles, right? To give us daily biases. Then we create the high and the close here. Now notice, right, we don't just randomly start shorting once we get to the last days of the month, okay? We have the buy side liquidity. It gets taken out here, right, at the end of the month, and then we have a fair value gap here. So we could see an entire day's bias from external to internal with a narrative behind it that we're creating the high of the open, low, high, close here. Runs out that buy side liquidity. It's the previous day high as well, okay? Market then trades lower, creates a fair value gap, starts to expand away. We know we're aiming for internal range liquidity. We know we're bearish because it's the end of a monthly candle. And then in the AM session equity open, we see this order block here holding very nicely and then sells off aggressively to the internal range liquidity, right? So understanding how candlesticks form, right, can give you entire days bias, and it can also be weeks depending on the structure and where the liquidity is resting. But being able to catch 1 or 2 of these days, right, at the end of the candles, just because we understand the anatomy of how an open high low close or open low high close candlestick forms, this is the kind of moves we can capture, right? Another example here, this is very recent price action just from the last week on NASDAQ. Call this live as well. Weekly rejection block here. So we've hit a high time frame key level, okay? And notice the date here, okay? 28th. So as we hit this high time frame key level in a bullish monthly candle, very bullish monthly candle, I was bearish here at the high time frame key level because I had the narrative in mind that we could potentially be creating the high of a very bullish open low high close monthly candle, and that's exactly what this rundown did. Okay, that was, going back here and attacking relative equal lows. Forgot to mention that. Okay, now let's look at this on a weekly chart and how this can give us a whole day's bias just by understanding it on a weekly chart. We're going to look at this one weekly candle. So this one weekly candle, very bullish, right? But notice this very small tail here, right? Really small, is an entire day's daily bias, which we can use in the equity open to catch a very nice scalp. Okay, here's the weekly candle broken up into 5 days, 1, 2, 3, 4, 5, right? Now we go above external range liquidity here, okay, on this candle, and then we see the market sell off and give us an entire day's daily bias here, just based off the understanding that it's Friday, we've gone above external range liquidity here, and then we run out the previous day high, right? Just by knowing it's the end of the candle and a high time frame key level has been hit, we could be creating the open, low, high close of a weekly candle. Okay, now with that one day of the weekly candle being bearish, with the narrative of the anatomy of a candlestick, knowing the open low, a high of the open low high closes to form, and then we can catch this kind of move, right? Because we have just a single day's bias. And this is going back to the introduction, right? Why did I say just try to predict the very next candle? This is why, because it helps you catch more opportunities, right? We know the very next candle is likely to be bearish, right? And then we build in a narrative around that. So going into Friday, after taking out that external range liquidity, right? And we have a open low high close in mind, creating the high. We're then in premium, right? As we're in New York session, right? Equity open. We're in premium. We have a discount fair value gap the market is likely to trade to. And then 9:30 open, we see it run above the high here. We get SMT with YM here. And then we get a bearish order block confirmed with the close below the body here. And then the market trades back up into the order block and sells off, right? On a lower time frame, we could obviously catch a better entry here, and we can catch a very nice scalp on NASDAQ to trade here. Small moves like this accumulate, right, into large profits when you're looking at having more funding on Top Step, etc. These are the kind of trades I took to make that 60K, right, in 3 days, right? Small moves like this can give us 1 to 3, 1 to 4 trades that we can capture just by understanding the anatomy of a candle, and just getting 1 day's bias just with this small move, right, is enough to capture thousands and thousands of dollars of profit.